Hi, I'm Manu. This is my friend Boris, and we're here just to give a summary or a recap of what this upcoming course, which is, I don't even know what the name of the course, it's called Pre-Closing Transactions or Reorganizations Involving Pre-Closing Transactions.
Yeah, pre-sale planning.
Pre-sale planning, selected topics on reorganizations and stuff. Why do you want to see this course? Well, there's new stuff that Boris, why don't you talk about, there's actually a surprise in here that Boris wants to talk about a really relevant case talking about pre-closing sale and dividends that you got to watch out for, which Boris...
Yeah, I mentioned it at the end of my presentation, but yeah, it's the case of Sons and...
VEFG,
yes, that's right, Manu, thank you. VEFG, that was an interesting name. Yeah, with a pre-sale closed dividends prior to the sale of the company, how before it was a slam dunk CRA opinion part 4 tax. Now the judge kind of picked a position sort of in between the taxpayer and the CRA, and he kind of made it more complicated for everybody, where basically he said that as long as the corporate beneficiary has the same year end as the trust, i.e. December 31st most of the times, then part 4 tax will not apply, and in any other circumstance that it will apply.
And so you have to be careful of that, and that's important when we go through the course, because like I said, we've literally this is very, very recent development that you need to see this course about, because as you know, most of the time when you're doing sale transactions, you need you need to pay pre-closed dividends, and now paying intercorporate dividends have become even more complicated, I don't know why, than it has in the past. I then talk about stuff about butterflies, how they're trying to simplify butterflies among siblings, and also doing estate freezes and purifications. When we're trying to purify and then put an estate freeze in, you may have certain tips and traps as well. These are all, and what's more important to say is these are all live case examples. These are real client situations we've taken from accounting firms that both of our firms service. So this is very germane to you. It's not some esoteric thing we talk about. This whole thing is based on basically potential screw-ups or screw-ups that we've seen after the fact. And like in Boris's case, it was a screw-up that we actually came in after the fact with the accountant did something we didn't know. So what we're trying to say is learn from other people's mistakes and don't make the same thing yourself. Come to this course. And the important thing is also that now in my case, and I think in Boris's case, they were asking a lot of questions about what is the status of surplus stripping in this thing. We do talk about with the new guard rules as well. We do say that in this, we have also talked about surplus stripping in AJAG. There's a course about this you can talk about in detail. Why is that relevant? Because probably by the end of the year, surplus stripping will be like the way the dinosaur, it'll be extinct. Catch it while you can. Look at the relevant AJAG courses on surplus stripping and this course to help you out. Otherwise, you might get sued. Anything else, Boris?
Yeah, not only that stripping is going to be extinct, as Manu said, likely, but even the reporting, right, of these transactions now, this is already now in here, like all the capital gain strips that CRA used to have to figure out from all the reporting that we do on the tax returns, put together corporate return, trust return sometimes, and a personal return. Now all of these have to be disclosed to the CRA, and that's already here and now. So that's also an interesting twist that they put with their new rules into our profession. But I guess we're going to have to deal with all of it somehow.
Yeah, I guess.
And make the best out of it for our clients.
Yeah, and the only thing is, last thing is that had I known that I had to be a police for CRA, I may have just joined the actual RCMP and stuff. But that's another story. That's another day. But come and stay tuned to this course. It's actually very relevant, very timely, given the way the time of that Boris's Sons and VEFG course case came out. It's actually quite a timely course. It's quite a relevant course, given this very uncertain times we have in tax and with tax planning. That's all I have to say, and thank you very much.
Thank you, guys.